Hi, this is David Schaefer, the American Retirement Advisor. This segment is on security for your retirement savings. As everybody knows, part of the human condition is we're born and we die. In the beginning, we're usually pretty happy and excited to know that we're going to have a long life and we have plenty of time to save for retirement. And then about 45 or 50, midlife if you will, sometimes we have a frown on our face because maybe we haven't saved enough for retirement and we have to scramble. Perhaps this segment will help us look at conservative ways to turn that frown upside down. For many of us, when we think of security, we think of the bank and we think of CDs as a safe way for our long-term savings. The challenge is they're paying next to nothing. 3% if we're really good at shopping. When we think of risk, we also probably think of stocks, equity in companies, and the potential gain. The challenge is, with the gain, there's also the risk of loss. Well, to combat this concern, or spread, if you will, between security and risk, insurance companies came up with a product, a fully insured product, called an FIA, a fixed indexed annuity. Now again, this product is designed for conservative, long-term investing or saving, and let me show you how it works and how it's performed. Let's take a look at historical performance. Take a look at the blue arrow on the bottom left. It's pointing to January 2001. It's illustrating if we put $100,000 in the market, the S&P 500, perhaps with Vanguard or Fidelity, and $100,000 in a fixed indexed annuity, perhaps with ING, Allianz, or perhaps American Equity. If you follow the rising arrows, notice the left arrow is evidencing loss of money. Those are actual S&P 500 returns as of those dates. On the right, you'll notice we're holding our own. The reason being is a fixed indexed annuity has no way for you to lose principal. Once principal is credited to your account, it's yours and can never be taken away. If you notice, over the next couple of years, the market's coming back nicely. And again, the S&P 500 is performing. The challenge is, we're so far behind that it's very difficult on the market to get back to where we started from. Whereas on the column for the right, the fixed indexed annuity, since we've never experienced a loss and our gains are capped, if you will, at perhaps 10%, we're seeing reasonable growth every year. Let's look at the fixed indexed annuity just a little bit differently. If we begin with $100,000 in the S&P 500 and $100,000 in the fixed indexed annuity and track its performance side by side over the past 10 years, you'll see that it's a little bit better to be in the fixed indexed annuity. If you notice the blue line, that's the S&P 500, it can go up and can go down. If you notice the green line, it can only go sideways or up. Now, if the market has a fantastic year, you're going to have a good year in your fixed indexed annuity. If the market drops below where it was the year before, you'll experience no loss because it's a fixed annuity where interest can be credited but no loss to principal is allowed. Let's look at a fixed indexed annuity. The first characteristic is it's truly a fixed annuity. That means that there's no fees, your principal is fully insured and reinsured, interest is credited to your account, and in this particular case, based on a market index, your account value can never go down or backwards. The product, because it's a fixed annuity, avoids probate without the need for a trust. Here's something else that's pretty neat. It can be converted to lifetime income at almost any time. And this is one of the only products available in the financial world that can be converted to an income that you can't outlive. Another nice thing about fixed indexed annuities is you can add special riders. perhaps a lifetime income rider, or perhaps an increasing death benefit rider, or perhaps a little life insurance, or perhaps a little long-term care. Remember, fixed indexed annuities are designed for long-term savings, so you really want a window of 10 years or more when you're looking at something like this. Well, thank you so much for watching. This is David Schaefer, the American Retirement Advisor. We really try to provide real solutions for today's financial challenges. If you need any help, please don't hesitate to call me toll-free at 877-220-1089, send me an email, or check us out at AmericanRetirementAdvisors.com.